1 year ago, Southern California experienced one of the most devastating wildfire disasters in American history.
Wildfires in general have been increasing, of course, in the western U.S. It raises the question of not only who is responsible for those wildfires, but who should be ultimately paying the cost of those wildfires.
It started as what felt like a pocketbook issue.
Today, Rocky Mountain Power's proposed rate increase has landed the company in hot water.
In Utah, the electric utility company, Rocky Mountain Power, filed an increase to its insurance rates. It's an $81 million increase related to wildfire insurance premium. A large part of that increase was because there was a large fire in a neighboring state that caused over $600 million worth of damages.
These premiums, if they were passed along to the ratepayers, would have increased their cost of electric energy by 30%.
Should Utah ratepayers be forced to pay for costs or damages that occurred in another state that was beyond their service area? FTI was contacted directly by the Division of Public Utilities to challenge the allocation process.
They needed expertise in a very unique area, the intersection of power, utility management, insurance, and regulation. FTI assembled a cross-segment team, and together we defined a methodology to create a new view of wildfire risk in the western United States.
We had underwriters, we had actuaries, we had economists, we had people that were familiar with utility companies. We had people in the US, we had people in Europe. What is the right way to allocate insurance to Utah? What's fair and equitable? In a very short time frame, we had to come up with testimony that could be used to support our findings in front of a rate hearing for the Public Service Commission.
I testified for about 30 minutes, and then I was cross-examined for 5 hours.
Rocky Mountain Power did everything they could to try to discredit this model. They tried to make it look like it's junk science, didn't mean anything, was not appropriate.
The people in the room came to understand why we felt this methodology was more appropriate, and ultimately it resulted in a lower allocation of those costs to the citizens of Utah.
After the hearing, the interesting thing was that Rocky Mountain Power are now using the very model that we used in our testimony, and they are going to use that as their basis for allocating premiums going forward. You know, they didn't know this existed. They did everything they could to discredit us, and in the end, now they've adopted it as essentially a core component of their rate setting process. Even though this happened in Utah, the principles here can be extended to almost any other state. There are wildfires all over the country. There are wildfires all over the world.
FTI, because of this work, is really well positioned to participate in the public debate, discussions about what is fair and proper from a regulation standpoint.
I don't think other firms would have had the expertise that FTI has to successfully manage this case the way that we did. I mean, any question that we had, we were able to find an expert within FTI to help.
It is very gratifying to think that part of the legacy of what we did is to plant the seed of eventual problem solving these incredibly contentious issues. I hope what we did here at FTI is just a start in that direction.